Dr. Babasaheb Ambedkar Open University.
Now, moving to the second part of the cash book, here we are supposed to discuss the types of cash book. In that types of cash book, we will discuss the first simple cash book. And in the simple cash book, how the simple cash book has been prepared. So, simple cash book, as I already discussed in the first part, what was the specimen format of the simple cash book? The same format would be prepared here in case of a simple cash book. And as I mentioned that there are two sides, one on the debit sides and on the other side is a credit sides. Debit sides, on the left hand sides, we are recording all the receipts. Whatever the receipts having by the company or by the businessman during the stipulated time or a particular period would be recorded on the receipt side. But if they have any payments during this particular period would be recorded on the credit side, that means on the right hand side. So the two sides of the particular cash book, and in this particular simple cash book only cash column would be considered. So that means the only cash transactions are supposed to be recorded in this particular simple cash book. Here we are discussing that simple cash book. That's consideration for that will move for the particular part of the problem. Here we are going to discuss the problems regarding the particular types of cash book. See the first problem of the simple cash book, and in the simple cash book we have a few transactions and how these transactions would be recorded in the particular cash book that we are supposed to discuss. Let's move here. This is a format of a cash book. So see here the format of the solution of this particular cash book, that is we are preparing a simple cash book for a current for the month of May 2014, and if you are going to see the two sides are there, the debit and credit, and on the debit sides we have a date column, receipts column, that the receipt number, LF, that is ledger folio number, amount. It means whatever the receipts we have that would be recorded on the left hand side, it means a debit side under this particular column. So will be written first dates, then receipts, from whom we are actually supposed to receive this, we are receiving this amount, and if the having a receipts number, then it would be recorded the receipts number in that third column. And if you posted this particular transaction into a ledger accounts, then the ledger folio number or a ledger page number will be written in this particular column, and amount, whatever the amount of this particular transaction, the amount will be written in front of that respected receipts. Now see the other side, the dates, payments, voucher number, LF, and amount, that is on the other side, right hand side, it's a credit side. Again we will be going to write the dates on that particular column. Payments, whatever the payments we are paid for the particular item, payments would be recorded on the under the head of the payments. Voucher number, so on the basis of voucher and maybe a bill, on the basis of bill, that bill and voucher number will be written in this column. Ledger folio number, so when you are going to post of this particular transaction into a ledger accounts, then the ledger folio number will be written on the in this column, and the amount of the respective transactions will be written in front of payments. Now see the first transaction. The first transaction is as we are supposed to discuss the cash on hand of rupees 8500, and here the 8500 transaction, that is opening balance. So see here the opening balance on the 1st May to balance brought forward, that is 8500 rupees, write down in front of the date of 1st in amount column. Now we will be moving the next transaction, that the next transaction is goods of rupees 4400 sold to Vinayak for cash. So here we are selling the goods to Vinayak, but it is selling on cash. So when you are going to sell the amount of goods on cash, the general entries of the cash particular transaction is the amount has been received from the Vinayak, so the cash account debit, and goods goes out as per the definition, as per the real account. When goods goes out, that sales account would be credited. So the general entry of this transaction is cash account debited to sales account, and if the cash account is debited, so it would be recorded and posted into the particular cash book on the debit side. Date is 2nd, sales account recorded in the receipt column, and the amount is rupees 4400 rupees. So this is the second transaction of the particular concern. Now see the third transaction, cash of rupees 3500 brought in the business. So if you are going to see the amount brought into the business, that means someone is actually brought the capital in the business. Now here the owner of this particular business brought capital or brought cash in the business. So cash comes in. So cash is a real account, cash comes in, so that's why the cash account is debit. Who brought this cash in the business? Owner brought this cash in the business. That means it is actually comes in the business in the form of capital. So capital is in a personal account and he is a giver, so the person account and giver would be credited. So the journal entry of this transaction is cash account debited to capital account. Again it's a cash account debit, so it would be posted in cash book. On the debit side, date is 5th. Cash account, we are preparing this cash account, so opposite name will be recorded in the receipt side, that is capital, and in front of the capital 3500 rupees is going to written. Now moving to the next transaction, that is goods of rupees 3000 purchased from Arjun for cash. Here if you are going to see, the transaction is cash. We are purchasing a goods from Arjun, so name is mentioned, simultaneously the cash is also mentioned. So in that way this is a cash transaction and we are purchasing a goods. So now when you purchase a goods, the transaction journal entry would be cash goes out and goods comes in. So when goods comes in, so it's always account is debit. Something comes in, it's affect a real account, and on the basis of rules and regulation of a real account, when it comes in, it's debit, and that's why the purchase account is debit. But what goes out? Cash goes out. So on the basis of a real account, cash goes out, cash account is credit. So the journal entries, on the basis of this journal entry, purchase account debited to purchase account debited to cash account, it would be recorded on the right hand side, it means in the credit side, by purchase account, opposite name. We are preparing this cash account, so opposite name is purchase, date is 7th, by purchase account, the amount is rupees 3000. The next transaction is salary of rupees 1100 paid. So here the paid salary of rupees 1100, it's also a cash goes out. So here salary is an expense. Expense is always debit. On the basis of a nominal account, all expenditures are debited. So salary is an expense, salary account is debit. What goes out? Cash goes out. So cash goes out, so cash account is credit. So journal entry is salary account debited to cash account. We are preparing a cash account in the books of cash account. Here the salary is an opposite name. Here it would be written on the dates 10th, payment side by salary account, and the amount is rupees 1100. Now see the next transaction is paid school fees of rupees 550 for his son. Now see here, paid school fees of rupees 550 for his son. Ultimately this is a transactions related to a personal account. It means here the owner is actually spend money for himself, for personal use. In the case of if any transaction is occurred for a personal use, which account would be affected? Drawings account would be affected. So here the journal entry would be, so fine, the cash is definitely goes out from the business, but for whom it is actually goes out from the business? For owner. So in that sense the drawings account comes into the picture. The drawings account would be debit. Who is a receiver? Owner is a receiver. So drawings account is debit, cash goes out, cash account would be credit. That's why it would be recorded on the payment side, and in the payment side dates is 12 by drawings account, and the fees for withdrawn for fees rupees 550 in front of drawings account. Now moving to the next transaction, that is paid dates 15, cash of rupees 3100 received from Poonam towards sales made in the last month. So how much amount received from the Poonam? 3100 rupees. Actually sales made in the last month, but amount received in the current month. So we received a cash from a Poonam, and if you received a cash, so cash comes in. Cash comes in, that means the cash account is debit. Who is a giver? Poonam is a giver. So cash account is debited to Poonam account. Ultimately cash received, it must be recorded on the receipt side. So see on the receipt side, it is preparing in the cash account, opposite name is Poonam, so the date is 15 by to Poonam account, in front of Poonam it is written 3100, because of we received amount from the Poonam, here it is written Poonam's account. Next is the transaction is freight rupees 350 paid. Now see, freight is an expense. So when you paid an expense, expense account is always debit. As per the nominal account rules and regulations, expense account is always debit and cash goes out. So the dates is on the payment side, dates is 19, freight is an expense. So by freight account, in front of that 350 rupees paid on for freight. Next transaction is rupees 2200 paid to Ramesh towards an old account. So here maybe the Ramesh account was actually carry forward from last maybe 1 month or 2 months, but because of that outstanding we paid 2200 rupees to Ramesh. Now we will see how it would be recorded in the books of accounts. See here, who is the receiver? Ramesh is a receiver because of we paid to Ramesh. So Ramesh is a receiver. What goes out? Cash goes out. So the journal entry for this transaction is Ramesh account debited to cash account. Here the cash goes out, so it means the payments. So it would be recorded on the payment side in this cash book. So see the on the credit side, on the payment side, dates is 22nd by Ramesh account, and in front of Ramesh account amount is rupees 2200. So this is the way to cash book is actually progress. All the cash transactions we identified on the basis of journal entry. So we need to identify the journal entries on the basis of a rules and regulation of the respected economic transactions, and after the journal entry it would be recorded. So now if you just see to try to understand this, as I already explained in the first part of this cash book, that if you prepared a cash book, then you don't have to prepare the ledger accounts in the ledger accounts, cash book and bank book account. Why? Because of this is almost actually preparing a ledger accounts for cash and bank accounts. So it would be actually compensated only for the transactions which are required to cash and bank directly from the particular ledger accounts as well as the particular cash book. So now moving to the next transaction, that is, yes, now 25th, received commission rupees 1300 and rupees 600 paid towards rent. Now here there are two transactions. One is received, that means it is your income, that is receipt, and other one is paid rent, that is your expense. So in these transactions you have two transactions, one is commission received and other one is a rent is paid. First we will discuss the received commission. So see on the debit side, on 25th commission received, it's an income, cash comes in and commission account is credit because of its income. So cash account debited to commission account. See on the receipt side, 25th to commission, and in front of that 1300 rupees. Now see the rent paid on the credit side, on the payment side, when you paid a rent, cash goes out. For what it is goes out? For paid rent. So rent account debited to cash account. So date 25th by rent, in front of that 600 rupees. So this is the way to record the transaction of the commission and as well as rent. Now moving to the next transaction, that is 26th of this month, furniture purchased for a business of rupees 1700. So now they purchase a furniture. In that sense, something comes in. Furniture is an asset, so it's affected a real account. What comes in? Furniture comes in. So furniture account is debit. What goes out? Cash goes out because of you paid a cash. This is a cash transaction, so cash goes out. So this is the way the journal entry of this transaction is furniture account debited to cash account, and when it comes in the business, something goes out. So payment has been made. So recorded, these transactions would be recorded on the payment side. 26th by furniture, in front of that the 1700 rupees is actually recorded. And now moving to the last transaction, that is, as more funds are required in the business, rupees 7500 borrowed loan bearing a 5% rate of interest from Pushkar. So now additional fund has been required by the businessman. Businessman actually borrowed the fund from someone else at some rate of interest. So what comes in? Cash comes in. Fine, it is actually borrowed, but cash comes in. So cash account is debited. From whom we borrowed this loan? Pushkar's. So the Pushkar's loan account has been credited. See on the receipt side, last transaction 30th date to Pushkar's loan account, in front of it the 7500 rupees it's written. So this is what all about. The amount of cash has been received on the recorded on the receipt side. Now all the transactions are recorded. Here After that, when you recorded all the transactions, we are going to make a total of the receipt side, and the total of the receipt side, it comes to 28,300 rupees. So when you make a total of the receipt side, that is 28,300, and we'll make a total of the payment side, and the total of the payment would be deducted from the total of the receipts. We have a closing balance. That closing balance is 18,800 rupees. As I already mentioned in earlier, receipts is always higher than the payment, and that's why the difference it comes here, 18,800 rupees for this particular concern. So this is what all about a simple cash book where we are preparing only cash transactions and cash column. This is what all about the second part of this particular chapter.
Dr. Baba Sahib Ambedkar Open University.